If my audio software goes out, I'll just switch to a normal mic. But how you doing?
I'm doing well. How are you doing?
Good. Eventful morning. My fiance got a flat tire, so I had to change that, and then she found a cat limping and ran to the vet. So never a dull moment.
Yeah, it's truly never a dull moment in life, and never a dull moment in crypto for sure. I mean, I'd rather be busy than bored.
Yeah, absolutely. I know we have a lot to talk about. We can dive into the Clarity Act, of course, but I guess we can just get right into it because I know last time when we were discussing, you were mentioning the 10,000 stocks and ETFs coming to iTrust. I know that launched in the past week, and that same time we finally got some nice price action. So we have a lot to dive into, and yeah, I could just do a quick intro whenever you're ready, and then we can open up for questions at the end.
Yeah, sure. Intro is fine. I'm ready.
All right. Welcome, everybody. Thank you for hopping on today, and I hope everyone's having a great day wherever you're tuning in from. So, we had a bunch happen over the past week. We had a long overdue price action. We had a $3 billion short squeeze in a matter of a day. We had the Treasury announcing doubling its buybacks of long dated bonds to at least $4 billion, and a lot more that we're going to dive into today among lending, the new quant tool with iTrust. So, I'm happy to have Jared Feldman back on again, and he is the Senior Vice President of Operations over at iTrustCapital. Most of you guys already know I have been with iTrust for over 6.5 years with my Roth IRA, and that is the absolute foundation of my long-term investing, and I encourage everybody else to look into it as well. You have a single login, 24 access to crypto, precious metals, stocks, and ETFs all under one roof. And I have iTrust directly linked in my X bio, along with, you should see a comment right under the spaces. So be sure to check it out if you haven't already. And nothing shared is financial, tax, legal advice as always. Please always discuss with your CPA or tax professional, and let's get right into it. So, Jared, I know I kind of ranted beforehand, but what's been going on in your world since we last talked? And tell me about the stocks and ETF launch.
For sure. I mean, the world's been really exciting on our side. I mean, whether it's a bull market or a bear market, we're always trying to build. We're a very ambitious company, and we're always trying to add new products. We added staking last year. We did some stablecoin rewards for USDC and RLUSD. We just launched stocks and ETFs. We have over 10,000 stocks and ETFs on the platform, and we'll continue to add different digital assets. I mean, I think we're over 100 different tokens that are available on the platform as well. We add tokens based on client requests. So we're really trying to curate a list of available assets based on different tokens that people want to invest in. And we have both, their retirement, individual retirement accounts referred to as IRAs. And we have our premium custody account, which is just a non-retirement taxable personal account at the end of the day. We are excited about some of the other things that we have in the hopper. What should be available next, we're hoping that it'll be available at some point next month, is going to be Q, which is our quantitative trading engine that we have been working on and will be making available to our clients. It essentially will have anywhere from 4 to 8 different strategies that clients will be able to choose from, and they'll be able to allocate capital into it and have it trade on the client's behalf, which our clients have been asking for something like this for a while. There are other things, other products and competitors in the market that have something like this, but we think that ours is really unique just because it's baked into our platform for clients to participate in without needing to, bring their own bot or connect anything from outside accounts. It's really an opportunity for clients that are sick of round tripping. People in the crypto space, they're very passionate. They're big believers in their tokens or the token of their choice. Sometimes they're a little too committed in the sense that they think the price is going to go up and they think it's going to potentially change the world. And what ends up happening is opportunities pass them by, sometimes with other assets, but also sometimes with round tripping and sitting in an asset for multiple cycles and getting frustrated with the performance. But a lot of people that trade, that have rules based and deliberate approaches to putting money into the market, they end up buying dips and they sell into opportunities that give them cash and dry powder to be able to invest more in the future. And the way that a lot of traders accomplish that is by relying on different indicators and relying on different metrics that allow them to know when the market's heating up and when the market's cooling down, and they're able to accumulate cash and accumulate more of their token over time. So we're really excited to have that in the platform. It's just something that people have been asking for a while, and we think is going to be a game changer for people who use iTrustCapital.
Yeah, I'm really excited about it. I know in May when we last spoke during these spaces, I was kind of just talking long-term related to AI agents and having a bot dollar cost average on your behalf and swap between, Bitcoin to a stock or moving between dividends, just the potential of all of it. So it's really cool that you guys are already building this quant tool. I have been a user of 3 commas for years, just as trading bots, but it's so annoying. I haven't used it since liquidity in crypto has been crap for the past couple of years. But the thing that was annoying about it was I always had to reconnect to all my exchanges. So I really like that yours is all in-house, and hopefully I won't have to worry about reconnecting it. Referring to like the API.
Oh yeah, for sure. I mean, that's part of why we ended up building this, because we were exposed to other competitors that, first of all, they're extremely expensive. We think they're overly expensive. They create value, just like Q will create value for people, but there's no reason to gouge clients when you're giving them a new opportunity to deploy capital into the market. So not only did we find them overly expensive, but we also found them to be overly complex when it came to implementing and actually getting your money invested and connecting your account. You have to create an account with the provider. You have to link sometimes a separate account like a trading view, and then you have to link it directly to your exchange of choice. And then we're seeing other players in the market, like different exchanges and retail brokerages, bringing like hey, you can bring your own LLM to the platform, and then you can basically tell your Claude what you want and how you want the market, how you want to time the market, and how you want to, deliberately deploy capital. But then you kind of have to really nail the prompt. Like, you have to really have a perfect prompt, and then you have to make sure that you're not missing anything when it comes to back testing and when it comes to which indicators you want to use and which other supplemental indicators could potentially strengthen your performance. There's so many things that you have to get right, which is why we felt like there was a big opportunity in the market to basically create a trading engine that does all the work and just lets the client self-direct and opt into the strategy, but then basically have the strategy work for them to end up going in and out.
Yeah, one pain point that I personally had maybe 2 times was I just had basic spot DCA bots running between 2 different exchanges. The API would just disconnect, and then my strategy, if I didn't check it every week, it would just not be running and I'd be screwed. So that's, great to know. And then even with all the agentic AI, like just thinking about the guardrails that people are going to be poking around, it's still a dangerous game to, trust AI to do everything correctly. You have to have those, kill switches for a human bypass to pause it, approve anything. But that's definitely where the space is headed.
Yeah, I think that it's something that institutional players have had access to for a while, and you need to have a minimum amount of capital to be able to take advantage of those sort of opportunities. But, for the last several decades, institutions have used, low latency, high frequency algorithmic trading, and there's always a quantitative element to that. And they've also had access to very high level strategies because they're able to afford dozens and sometimes hundreds of quants and all these different financial analysts, and that's not something that your regular retail investor gets access to. But I think that in a lot of ways, AI has been a game changer and really the great equalizer to democratize a lot of things in our society when it comes to access to information. And this is just another example of kind of using AI to formulate the strategies and then having a human supplemental touch in order to make sure they're properly curated and that you're not missing anything, and then putting that into basically a strategy engine for crypto, and then also focusing on different cryptos that people on our platform really like. We've really been extremely optimistic about how our clients are going to respond to this product.
Yeah, I think it's really cool, and something I rewatched the last two spaces I did with you just to kind of catch up. And one thing that you said was with AI and crypto, it's almost like they were made for each other. So, like for example, we can have a ledger, and even like the XRP ledger, it can be essentially the guardrails for AI because AI can't manipulate the voting, the decentralization, anything like that. And I know that Mastercard's verifiable intent and all of that is for agents buying things at a fraction of a penny. We're seeing X402 with all these microtransactions right now. I think it's like API calls and getting data for NFTs. But yeah, really cool where the space is heading.
Yeah, I think that there's the agentic element and how the AI agents will be leveraging crypto, because not only is it available 24/7, but it's so easy for the agents to plug into because it's just code at the end of the day. Anything that has a publicly available API library or anything that has open infrastructure and that is open source, AI will have the opportunity to plug into, which is what makes crypto such a natural fit for AI to kind of work together. But that doesn't mean that payments and building are the only use cases for AI and crypto, right? I think that us formulating Q is a really good example of how you can use AI to just allow people to access and utilize crypto. In this use case would be trading in a way that they normally wouldn't have had the opportunity to do so.
Can you give us any? So I know in the original announcement with the quant tool, you guys said auto buying and selling. You had risk parameters, and you're able to basically opt in or turn it on and off. Would you be able to further explain or give us a bit more insight on maybe the risk parameters or features that this is going to come with initially?
For sure, the main ways that it'll manage risk is really the strategy behind deploying cash. For strategies that'll be more aggressive, they will be more aggressive into using cash, deploying more cash when they feel that it's the time to buy. They'll be taking cash and deploying it into altcoins when they feel like the market is primed to go up. Whereas more conservative or moderate strategies will deploy less cash and wait for more confirmation of an uptrend before deploying cash, and also lean more heavily on Bitcoin. So that's kind of like high level, the thought process behind the strategies and how conservative will differentiate from aggressive. It's going to be about cash deployment, and it's going to be about how heavily they go into altcoins versus they go into Bitcoin. And anyone that's been in crypto, they have realized over time that there's certain times that Bitcoin outperforms, and there's certain times that altcoins outperform. And they also know that a lot of influencers that they follow end up nailing it. A lot of influencers that they follow were all talk, and they ended up not really understanding or realizing what the market was going to do. And that's not to say that anyone in particular is always right or that anyone is always wrong, but there are some people that are more talented than others and understand how these different indicators and trends play into each other. And what we've done is we've figured out how to backtest and how to stress test these strategies over time to try to hopefully have the highest probability possible of success. And I think that when people do look online and see a lot of these folks that draw triangles and try to get all technical with TA, they understand it, but they're just kind of relying on them having faith in the person that's doing it. Whereas, what if you had the ability to follow all of them at once and utilize the strategies that have the best performance historically and that have done well and have done well during previous cycles? And I think that's what people want to see, and I think that's what we're trying to accomplish.
Oh yeah, and I have been there. That hits home with me is just being I only get extremely confident when I see Bitcoin's monthly candle body, the full body closing over the 8-month EMA. So we poked through it, but that's only when I'm running bullish on the monthly. But you mentioned back testing. Is there going to be, or are there plans to be able to back test your strategies?
Well, you're gonna see the historical performance of these strategies, and it's really more like hypothetical performance, because ultimately these are strategies that have just been recently formulated, but they've been formulated based off of historical performance and back testing based on, hey, how would these strategies have done during previous crypto cycles, during multiple cycles, right? And then during different parts of those cycles. So what we've done is we've done our very best to ensure that the strategies would have performed well during various market conditions. And what we'll show people in app is you'll see different eras of performance. You'll see 6 month, 1 year, 3 year, etc. So you'll be able to see how the strategies performed. But our clients won't be making their own strategies, right? You're not going to be able to whip up your own recipe and your own strategy and then be able to back test that yourself. You're going to be looking at the 4 to 8 strategies that we'll have in app, and then you'll be able to look at the historical performance and various advanced metrics related to those strategies.
Cool. Yeah, I'm excited to see whatever those strategies are and if, what indicators they're using, if it's, RSI or anything like that. Now, with the Clarity Act, being delayed like usual, we know the Genius Act, the stablecoin law from last July, it had its first cloture vote delayed in May a little bit, and then eventually in July it became law. Obviously, the Clarity Act is a bit more complex with a lot of ethics issues going on. Let's say that this is delayed until, I know it could launch by end of year, but let's say it's delayed until mid 2027. Does that slow down anything you're building, including the quant tool, lending, etc.?
No. Quant trading has been available for a while. It's been available within crypto even since before I started with iTrustCapital. Clients historically have asked us if they can bring their own bot to the platform. That's always been a thing. Crypto-backed loans are running rampant in a good way throughout the financial institution environment throughout the country or the world right now. There's so many different players and so many large financial institutions that are permitting crypto-backed loans. It's being used for leverage, back leverage, retail lending, institutional lending. These are DeFi, non-DeFi. This is a very well-established industry. So I don't think that that'll impact us at all. We're still going to build crypto-backed loans. We're still going to launch Q regardless. I think where Clarity really will make a difference will be for like broker dealers and RIAs. I think that big banks and broker dealers and registered investment advisors, they have a really hard time going below knee level into the water for crypto because they don't feel confident in the regulations. And the SEC and the CFTC have done an amazing job of creating guidance But the problem is that that guidance more or less expires with any new administration that comes in 2028, or I guess they'll be sworn in 2029, and that presents a big issue for a lot of these highly regulated institutions because they already operate like tanker ships. They don't just like turn around quickly like a speedboat. They already take a long time to turn and change direction and adopt a new asset class. So for them to do it in the current environment without ironclad laws set in stone makes it really hard for them. And that presents the overwhelming majority of capital in the world is financial institutions. Retail obviously makes up a lot of the investment, but financial institutions really move the needle in a lot more of an impactful way. And without having clarity, a lot of those players won't want to fully get in. Now, that's not to say that NYSE and NASDAQ and all these different places are going to stop with their tokenized stock offerings. I think that tokenized stocks will launch regardless of whether or not clarity passes. But I think clarity helps with that. And I think clarity is really important. For our company, a rising tide lifts all boats, just like the ETFs. Even though we didn't offer ETFs at that time, just having having a Bitcoin ETF and an ETH ETF really helped our company because it created more legitimacy in the space. And it was almost like a Trojan horse, right? Like, hey, I want to do the Bitcoin ETF, but then I want to trade 24/7, or I want to take retirement income in crypto, or I want to invest in 50 other tokens, not just Bitcoin and ETH, right? So the ETFs were a real Trojan horse and really benefited our company in a lot of ways. And Clarity will kind of do the same. You'll just have people who never would have had access to crypto through their bank account or through their financial advisor. And that's going to lead them down the same road that people with the ETFs went down. I want to invest in this random AI coin, or I want to allocate into a meme coin, or I want to actually hold spot and I want to be able to take retirement income in crypto, and my financial advisor won't let me do it, but iTrustCapital will, right? So either way, we will benefit from clarity, but I think we're going to be just fine and we'll have the same product roadmap regardless.
Yeah, we're having really interesting times. I know that the US national debt hit $40 trillion. We had obviously the bond yield changing, and just thinking about everybody with, I don't know if it's billions or probably trillions in pensions, just worried about if the US can even pay it back. I think there's just so much uncertainty with geopolitics and everything in between. So we're in really interesting times.
Yeah, we are in really interesting times. It's really exciting. I think AI will
Exciting and terrifying.
it is terrifying. I mean, I think that the world is moving in the same direction, whether we're terrified or not. So you kind of just have to get with the program in a lot of ways because there's nothing that you can do to stop this train. I mean, I know that a family member was talking to me, and they were talking about all these data centers, right? That's like popping up throughout the country, and how do we stop these data centers from proliferating? And at the end of the day, you can't stop these big organizations, these big companies that have more resources than everyone else from continuing to grow and do their thing, right? If there's certain states based on political orientation that don't want them to build data warehouses in their state, well, the other states with the other political orientation is just going to let them build double in their state. Like there's no stopping it. That's just the nature of capitalism. And I don't think that the current administration and the current Congress has it in them to draft any laws that will stop it from doing its thing. I mean, they're having trouble passing any laws right now, right? There's just so much gridlock in Washington. So I think that it's just going to be more AI, more automation across the board. And I think most people just want the robots to take over, right? It is a little controversial. There's a lot of people who are more purists and they just want for things to kind of stay the same. But I think most people, your average person, just wants the robots to take over and make life easier in every different facet of people's lives. And then we'll see what happens
Well,
after.
I just want the robots to do my laundry. I don't want them to
Yeah,
give me more work to do.
1,000%. I can definitely use some help with laundry for sure. Yeah, and then we'll see what happens after AI and crypto. There's definitely going to be something after AI and crypto. There's always something else. Who knows what quantum will bring? Who knows what different technologies will bring?
Let's go back to the stocks and ETFs. So I don't know if you mentioned this, but did you go through your experience this first week of it going live? Did you see decent demand from iTrust users, or because crypto is rallying, people didn't really care?
We've had thousands of people sign up right away. It was
Oh,
really
wow.
it was really instantaneous, and we're still building ACAT functionality, which we hope to have live in the next month as well. But ACAT functionality will allow people to move their equities from their retail brokerage where they're at right now and just move those equities in kind directly to iTrustCapital. And we think people are going to want to do it. They've already asked for it, and it's because people love crypto, but people really like us as well. They like being a part of our community. They like the opportunity to be part of a more tech forward company. They like the service that we have, and they want to have all their assets in one place. So we think that there's going to be a lot of demand to bring equities over. We've had a lot of people opt in so far. A lot of people, have different equities that are more like legacy traditional plays, whether it's like semiconductor, uh, I guess like AI now. There's obviously the Nvidias and Microsoft and Apple, but then people also really enjoy allocating into some of the crypto-based ETFs. There are a lot of ETFs out there, not necessarily spot, because people on our platform just prefer to own spot through us. But there's a lot of ETFs, like whether it's like digital asset treasuries or different ETFs that are like inverse ETFs or that allow people to earn some yield, that are inherently a lot more risky than just owning spot, like insanely risky. But people do like to invest in those assets as well.
So basically, if let's say I have an account on, Fidelity or Schwab, I have Nvidia stock, I am completely able to move it over to iTrust, paying no taxes.
Correct. If you have a regular brokerage account, you can move over the equities into a PCA. If you have a Roth or a traditional IRA or a SEP IRA, you can move those equities into your SEP, traditional, or Roth with us. Can't do it right now, but once we enable that functionality, which is being actively worked on, we're trying to streamline that. You'll be able to move it over just like an IRA transfer, which our clients do every single day. We have clients that move over hundreds of millions a month from retail brokerages that are in their IRA, and they go through our process. They just sign an electronic form. They move over the funds. Let's say it's like Schwab or Fidelity. They send over a wire. It funds their account with us. But because they signed all their paperwork and went through the proper process, it's a non-taxable event. It just goes from IRA to IRA.
Very cool. And then did you mention, I think in the last spaces, about maybe it was like T+1 settlement when you're trading between an equity and going into an alt?
It's still T+1. There's nothing
Okay,
that, yeah,
great.
we're exploring ways to be able to have you go from equities to crypto without waiting the T+1. But if you don't have any other cash in your account and that's the only cash you have, you got to wait T+1 to deploy it into crypto.
Got it. All right. Well, we can open up for some questions if anybody wants to ask anything at all related to iTrust. Yeah, and even just going back to like the crypto-backed loans, what I like about ETFs, I don't own any ETFs because I'd rather own the direct asset, but I like that it actually creates demand for crypto and opens the door to TradFi. But the thing about like DeFi in crypto today is it's just one big science experiment. It's almost like it's just running in a loop where we're not really getting that capital from outside the market yet. And a lot of, I know institutions are getting involved, but for the most part, we're still kind of observing. You have, people depositing Ethereum, borrowing USDC against it to buy more ETH, and then you deposit that to borrow it. And you're just kind of leveraging that same collateral over and over again for more rewards. And obviously that can lead to some risky market moves when different positions get closed. But I'm really looking forward to more institutions getting involved and really having that yield backed by businesses that are like generating cash flow, like productive output.
I think people want to see more productive investments in general, not just in crypto, but just in the legacy world. I think that there's just been so much speculation driven investment over the last few years since COVID because of all the money injected into the system that it was like number go up for everything. And I think what people are noticing now with crypto is that number does not go up for everything, and you need to make sure that you're investing in tokens that inherently and naturally accrue value based on their protocol. I think that's why people love hype so much. And we don't provide financial advice, and I don't provide financial advice, but hype is just one of those assets that does have just inherent value accrual in the token, and it's been, I guess, the darling of crypto in a lot of ways for the last few months because of how much it's been relied on by oil traders and any sort of derivatives based speculators over the just since really the war with Iran. It's really been in the main spotlight as well. So I think people just want to see tokens and any sort of investment that inherently has revenue, drives value, and there's a reason why number go up, as opposed to what's happened over the last few years, which is just more speculation without proper values.
Yeah, well said. Well said. I know we have, I think there's a big Fed meeting this Friday with Kevin Warsh with his first big speech. So we're going to see what he's leaning towards, regarding rates. And yeah, I am hoping that we get some good news with cloture on September 15th.
Yeah, I don't know what's going on with interest rates right now. And it's so hard for me to imagine them raising rates. Lowering rates, I think, is probably safe to say it's not happening right now. That would be absolutely shocking. But it's also hard for me to see them raising rates just because of the pressure from the administration and just all the narratives in general around raising rates. So I really think that, me personally, I believe that they'll just continue to hold steady.
Yeah. Yeah, we will see. Biggest moves usually just happen out of nowhere, just like that recent short squeeze.
It was violent. I mean, it was a very violent move, right? I mean, a lot of people didn't really see that one coming, and that's kind of how it usually works in crypto. But one thing that I noticed, which was really incredible, was just how violent it is and how violent it was. There's so many folks that were pushing the 4-year cycle, and what the 4-year cycle means to most people is bottom in Q4. But I don't think that history always has to repeat. Oftentimes it rhymes. And what 4-year cycle could mean is that just some sort of general bottoming in the second half of the year, and then it starts to recover and then upticks by the end of the year, right? It doesn't always have to quote unquote bottom in Q4. But I think at the end of the day, what last week's lesson was how when the market does decide to move up or down, it can be very, very violent, and it could feel extremely overwhelming for people who are sidelined. So I think that it was a real eye-opener that this is what crypto can do, despite the fact that it's been so lethargic and frustrating over the last really 8 months or so. That was a really wicked move, and it's what we've become accustomed to who have been in this space for a couple of cycles.
Yep. Yeah. The way it works, if it's just one coincidence or a giant algorithm or it's just happening, is right when you're tired, the market just finds a way to just tire you out, wear you down, and then boom. But yeah, I'm really hoping that we get this Clarity Act through in, I mean, hopefully the next 6 months. But we're going to see how they battle through those ethics.
Yeah.
Anybody have any questions, or we're going to call it a day? Alrighty. Well, I think we covered plenty today, guys. And again, if you don't have a Roth IRA yet, that is the absolute foundation, tax-free growth in the market. And just thinking about it 5, 10 years out, even longer, because I believe crypto's here to stay. You can be dead right on your investments, but at the end of the day, you can still hand a huge chunk over to taxes if it's all just sitting 100% in a regular taxable account. So diversification is key. Whether you do cold storage or use custodians or an exchange, diversify where you hold your assets, how you hold those assets. I know there's been just so much going on with AI developments. Stay paranoid out there. And again, with iTrust, you have a single login. You have a variety of accounts to choose from, multiple asset classes, lending, and now the quant tool on the way. So if you want to set an account up completely free, that link is the very first link in my X bio and the top link in every single YouTube video description. Jared, thank you so much for your time today, man. And I'm excited to catch up again soon.
Yep. Thanks for having me. Take care.
See you guys. Thank you for joining. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.